Good morning. This is Jared Havins with CreditHavins podcast and YouTube. I'm actually recording both right now. Today's episode, we're going to be going through credit and financial stability and what that means and what we're able to do here at Credit Life and being able to provide the services necessary to help someone actually achieve those type of goals as well as hitting any specific lending goals. So there's a lot that goes to this process, and today, I'll give an overview on how that works and what that means and how you're able to achieve credit and financial stability, as well as educating on things that you can do on your own. Because a lot of times it really just takes education for you to understand what needs to be done properly, and you may not need to necessarily retain the services of a company to help you do that. Sometimes, the coaching and the education is something that you look forward to. It holds you accountable so that way you do hit your goals. There's so many different aspects to the process, and so if we're able to help anyone, through the podcast, through the YouTube, through our websites, through our social media platforms, by all means take advantage of that. And at the same time, if you're looking for some help and want to talk to me personally, don't hesitate to reach out to us. You can actually reach out to me directly at 612-444-3426, 612-444-3426. That is my direct line, office line. Or you can email me at Jared, Jerrad, at yourcreditlife.com. Feel free to reach out at any point, and also for anyone that wants to call in on the podcast live, I'll give out my guest call-in number right now. It's 929-477-3212. That's 929-477-3212. Feel free to reach out live any point in this podcast. It's actually broadcasting live right now. You can reach out to me. You can ask me questions. Would love to answer your questions. This is a newer podcast that I'm starting to promote, so maybe there won't be anyone on today, but over time I'm sure there will be. And so let's get started. Now, I'm going to pull something up that anyone on the podcast, you're not going to be able to see this, but you on YouTube can. And I want you guys to see this. I thought this was a perfect example. We have what's called an automotive rate sheet, okay? And we have a little bit of a breakdown here that shows, certain specific loan amounts and what that means at a certain interest rate over a certain term and how much you actually end up paying in interest. This is what I mean by having good credit leads to financial stability. And this is a prime example right here. So look at this. Let's just say, let's use a loan amount of $15,000. Okay, that's a pretty average loan amount, I'd say, for a car purchase when it comes to a used car. If it's a loan amount term of 72 months at 5% interest rate over the course of that loan, you're going to be paying $2,430 in interest. Okay, now 10% interest over the course of that loan, you're paying $5,092. So we're essentially almost doubling, the amount of interest there over the course of the term. Now, when we jump up to 15%, we're at $7,980. And the last bracket we have here, and the reason why I included this 20%, is it is not uncommon here, at least in the state of Minnesota. I have seen 19 and 20% interest rates on auto loans frequently, and so that's why I wanted to make sure I include this, because I want people to understand if you're in a position and needing help with your credit, you need to get some help and get back on track because you're paying a ton of extra money unnecessarily. Be proactive in your situation. Look at this, 72 months, 20% interest. You're paying over the course of that loan $11,085. That is craziness. So this is what I'm talking about, and I hope anyone on YouTube there, you're able to see that. Looked like it was clear. And on the podcast, hopefully you got that information. But that's what I'm talking about. We need to be proactive, okay? And so here at Credit Life, in the state of Minnesota, we have affiliations with companies that we help with. Prosper Law Group is an attorney firm based out of Minnesota that helps a lot of clients with our program. We have a few other companies that we're helping, and Credit Life itself is in other states. Would love to help you. What we focus on is a few different aspects. We have the personal credit improvement, which is going to be holistic credit improvement strategies that not only repair the past, but also through coaching education, properly build and manage your credit in a way to maximize FICO score improvement potential, improvement of scores, while also getting your credit profile in a position of mortgage approval, auto loan approval for a lower interest rate, helping you get lower premiums on insurance rates that are impacted by credit, which is life insurance, homeowners insurance, auto insurance, huge, especially auto insurance. We also help people with debt settlement. That's specifically here through the affiliation of Prosper Law Group. Being able to have someone at the attorney firm help you and represent you in negotiating a derogatory debt that's been either charged off as a bad debt, has gone to collection, or is in judgment, which you definitely want to get the help there if you are in a position of having any judgments. Being able to go in there and negotiate a settlement at a lesser amount of what they're asking. That's the key. It's all about, one, working within your financial situation, helping you save the most money possible, but also making sure it's done correctly. Making sure if it is a judgment, it's being filed correctly, it's being updated correctly with the county, with the credit bureaus. If it's a collection, if you're able to negotiate payment for deletion, where you settle that out and they also delete the debt. Now, take that in mind. That's very positive for your credit, but can't happen all the time. It's not a guarantee that that can be every single, account, but it's definitely worth trying and negotiating on. So debt settlement is key, very, very key in the personal credit improvement process. If there are any debts like that that are valid and make sense based on your specific goal and timeline, and pulling the trigger on debt settlement. Also, through the Credit Life credit improvement process, we offer budgeting help. Budgeting to me is key. People need to be aware of their money management. How much is coming in and where's it going? Simply put, and for a lot of people, being able to put that down on paper, we have a lot of great tools and tips for our clients. For people out there that want more information, can reach out to me, but really going through and analyzing, we start with what's called a statement of financial status and figuring out, what's currently coming in, actual take home, and then what are we looking at outgoing per month. And then based on all that and really evaluating where our money is going, what are things that we can cut back on, which I can tell you this, 9 times out of 10, everyone I have met with or spoken to, there is plenty that can be, cut back on, which a lot of people, once again, once they see it and realize it, and they have a specific goal, they're going to be motivated to be disciplined in those ways to cut back on certain expenses, like, going to Starbucks every single day, whatever it is, those type of things add up. Going to the grocery store, not having a budget and just buying whatever. There's certain things that can be done when you're aware. Having awareness of your situation and having a goal and budgeting will 100% help you tremendously with financial stability, but also, once again, can be used as a tool to get you to your goals in the future. So that's a big, big piece that we offer here through Credit Life. Another piece that we offer is our student loan help, real student loan help. A lot of people out there are burdened right now with student loans of all income brackets and all different professions, regardless of what it is. You could be a doctor, a lawyer with $200,000, $300,000, $400,000, $500,000 in student loan debt. You could be someone that's going to school to be a nurse or just got out. You're a nurse. You have, $60,000, $70,000, $80,000 in student loan debt. You could have gone to school to be a teacher. Whatever it is, anyone. If you've gone to school, most of the time you have student loan debt, okay? There are a lot of options surrounding student loans. You have federal consolidations. You have interest rate reduction refinancing options for both private and federal student loans. I mean, there's a lot of options out there. If you're defaulted on student loans, there are many options to get out of default voluntarily, with voluntary payments that work within your budget to get you out of default, to then open up opportunities to consolidate, refinance, whatever it is, to get you back on track. So that's another key piece, when it comes to improving credit, and in the end, also having financial stability. Finally, for the small business owners out there, we do have a program available for small business credit building and financing options, both local and national. So a lot of great opportunity there. But what I want to go into now, after I explain what we're able to offer here at Credit Life, I want to really go into detail in how we're able to improve our credit in order to maximize, our potential for lending, for financial stability, all that, okay? So it starts by pulling a credit report. You need to understand what's actually currently being reported right now by the three major credit bureaus. You have Equifax, Experian, and TransUnion, okay? These are the three major credit bureaus. View them as large data warehouses. They are list sellers, okay? They take in data, store data, sell data. That's it. If you applied for a mortgage today, Waterstone Mortgage, Bell Mortgage, whoever, Wells Fargo, doesn't matter. They have to pay to pull a lender report, a lender credit report, okay? Costs money. It's not free. That's how the bureaus make their money. They sell information for marketing purposes. So if you get pre-approval letters in the mail, that was paid for ultimately by the credit bureaus, or paid for and paid to the credit bureaus, I should say. They are for-profit businesses. They are independently owned and operated. They are competitors. They are there to, once again, take in data, store data, sell data, okay? So it's key knowing how important credit is in our ability to be able to move forward. We need to understand, one, what's actually on the credit report from all three bureaus, not a single bureau pull. There's Credit Karma out there, which I'm in no way negatively speaking on Credit Karma, but you have to understand Credit Karma is a detailed summary of what's on your credit, okay, between two bureaus. It used to be just one, now it's two, Equifax and TransUnion. So that's a nice starting point, but I would prefer anyone that's watching this YouTube or listening to my podcast, I would highly, highly recommend utilizing a consumer credit monitoring service that you would pay for that monitors all three bureaus. It allows you to pull a full credit report once every month, every 30 days, that does not negatively impact FICO credit scores, so it doesn't hurt your score at all. It's your legal right to monitor your credit. So you're not applying for a loan when you're pulling a report, so therefore that is not a credit-seeking inquiry. It doesn't hurt your score. There's a lot of great services out there. There's privacyguard.com, identityiq.com. There's a lot of them out there, okay? So Credit Check Total, I mean, they're everywhere. I prefer, me personally, I really like IdentityIQ. The reason being is it's a detailed report. It provides credit scores. They are consumer credit scores, but all of them out there are consumer credit scores. But also it gives you what's called a lender rank. It shows you where do you stand right now currently with lenders if you were to apply for a loan. So you have poor, fair, good, excellent, okay? That's actually really nice to know. Where do I stand right now to a lender? You're going to be able to see that simply, on that report, which is very nice. If you out there listening, IdentityIQ is a great service. It does cost $29.99 a month, but through Credit Life, we have negotiated a discount at $1 initially to pull for 30 days, and then instead of it being $29.99 a month, it's $19.99 a month thereafter. So it's $10 a month savings, and initially it's only $1 to pull. So it's a phenomenal option. Please reach out to me if you want me to send you that. I can do that very, very easily. I just need your name and email, and I can send it off to you with the link so you can enroll. But once again, you have to start by pulling a credit report. Let's analyze where we're at today. So now we've pulled our credit report. We need to actually look, don't focus on the score at first, okay? Let's actually scroll down, or if you're printed, go through it. Let's see what's actually on the credit report. And here are some things that you're going to want to look for. One, how many open active accounts do I currently have? Of the open active accounts, what types of accounts are they? Are we looking at installment accounts? Installment accounts are going to be mortgage, student loan, auto loan. Anytime you're making a fixed payment over a certain amount of time to pay off a loan, those are installment payments. That's an installment account. Revolving accounts are key too, which are going to be credit cards and lines of credit, okay? Let's analyze what's currently open and active. How many are installment? How many are revolving? Now, of that, I can tell you this right now for everyone that's listening. Ideally, based on your future goals, future lending goals, whether it be mortgage approval, auto loan approval, maybe you're a business owner and you want to be approved for business funding, you are going to want to have a certain amount of open, active, revolving accounts. I always tell my clients, this is not to get you into debt, but we'd want to have 3 to 5 open, active, revolving accounts in good standing, being managed very specifically to maximize FICO point potential, and that will put you in the best position for lending opportunities. And there could be a variance there in the amount that we want based on our future goals, okay? So keep that in mind. So no, you want credit cards, okay? Once again, not to get you into debt. I'm not here to get you into debt. You can easily, you don't have to be in debt to have good credit. There's many things that can be done to put yourself in a good position for lending opportunities if needed based on your goals, but not putting yourself in a bad position with debt, because a lot of people out there who have gone through problems in the past, they get a little worried about that when I bring up the credit cards. And there's a lot of tips and tricks on how to manage those. Feel free to reach out to me if you want education on this. Reach out to me, 612-444-3426, 612-444-3426. I would love to walk you through your credit report and explain proper management tactics specific to FICO and how you can maximize your credit score, to get to your goals. Would love to help you. It's a free consultation. It doesn't cost you anything to do that except for pulling your report. 612-444-3426 or email me, Jared, Jerrad, at yourcreditlife.com. So once again, we're looking at how many installment accounts do we have, how many open active revolving accounts do we have, okay? We need to have open active accounts, right? If I was a bank and you're coming to me and you're applying for a loan, I'm going to pull a credit report to get an idea of your history of lent money. How have you handled lent money in the past? That is going to be a very good indication of how you're going to handle the loan that I'm potentially loaning you, the amount of money that I'm loaning you, okay? That's a big part of the approval process. So if you think about it, this is why you hear having no credit is the same as bad credit. That is very true. It's maybe not identical, like they're, bad credit, but there are factors there, and this is why. If I don't know how you've managed lent money in the past, how am I to know how you're going to manage the money that I'm potentially lending you? Okay? There has to be something there for us to make a solid decision. I'm a businessman. I need to make sure that if I'm lending you money at a certain interest rate, that you're going to pay me back. It's all about, it's all about profits for me. I'm here to help you, but it helps me, right? I'm a bank. So that's how they're looking at it. So it's very important, once again, to have multiple open active accounts to show the ability that you can manage a certain number of accounts now, so therefore the lender feels comfortable to lend you money when it comes to a mortgage, when it comes to an auto loan. And the auto loan, really, the low interest rate, that's key, okay? You can get auto loans out there with bad credit or no credit, okay, but you're going to get stuck with the high interest. Remember what I brought up here? Once again, look at that. Look at the differences in those numbers. Do you want to be at 20% interest or do you want to be at 5% interest? That's your choice, right? So let's be proactive and figure out how to get our credit in position till we pay less money. That's what it's all about. So we're looking at the number of accounts opened, all right? Now what I want you to analyze is, of the revolving accounts, what is the current, so credit cards, lines of credit, what are the limits and what is the current balance reporting on the credit report, okay? Any time that you have higher ratios, utilization ratios, you're maxed out, you're close to maxed out, you're over halfway, whatever it is, think about it. If you are maxed out on credit cards, to me as a bank, that's a risk. Something's going on that you're dependent on credit. So therefore, there's a risk there. There will be a negative impact to credit scores, and there's potentially either you being denied for a loan because of that, or the lender, because you're higher risk, is going to have a higher interest rate tied to that loan that you're applying for, okay? So if you're able to, and I understand this, what comes down to budgeting and money management, if we're able to strategically manage these accounts in a way over time to bring down ratios to a certain level, that will, one, improve credit scores, and two, it's going to put us in a good position for that loan that you're looking for. So that's what it's all about. Let's be strategic, let's be proactive, and make sure we're taking the right steps. Now, when you're looking through the credit report, what I want you to be looking at, are there any accounts with late payment history on there? So 30 days late, 60 days late, 90 days late, and up. Is that within the past year, 2 years, or longer? What are the types of accounts? What were the loan amounts of those accounts originally? These all play a role, okay? We got to figure that out. That's basically finding out if there is or what is negatively impacting us today, right? Your credit report is a history of lent money. So we need to figure out, is there anything within our history that's showing risk? If there is, it's causing a negative impact to credit scores, right? We got to figure that out. Do we have any history of accounts being charged off? Profit and loss, collection, judgment. Those are key terms that you want to remember. Charged off, collection, profit and loss, judgment. Look for any type of accounts like that or with that type of verbiage. You'll know that that is considered a derogatory account, a negative account. Something happened there that account went into collection and then either was, charged off if it was an original creditor like U.S. Bank credit card, whatever it is, they wrote that off as a profit and loss. They then sent that to a collection company. It's now reporting as a collection, maybe separately, or maybe it's still with the original creditor on the report. There's a lot of different things that we need to be looking at there. But ultimately, we have to understand the status of that account. Is it causing negative impact? Yes, if it's on there, it is. Also, is there a balance? Is there a balance still due? Is it with a collection company with a balance due, but that hasn't been updated on that account? There's all these different things that we need to analyze, because ultimately what we're looking for is the information within your credit report today accurate, verifiable, and valid as of today, right? If you have an account that you paid but still reporting a balance, that's inaccurate, and that's not uncommon. If you have an account that is showing original creditor with a balance still due, but yet went to LVNV funding or Midland funding or Midland credit management or portfolio recovery or enhanced recovery, the list goes on, and that's reporting a balance, well, now there's an inaccuracy, right? This all plays a huge role, and unfortunately, it is not, the way it works is it's not the credit bureaus that are monitoring this for you to make sure it's accurate always or valid. They're not going to do that. It's your legal right and it's your responsibility to be doing those things. Okay, so that's why it's so important. If you're looking at credit repair options, you need to understand what's on there in the history, and at that point, we can strategically, legally challenge information within your credit report that's potentially inaccurate and have them go through the verification and investigation process as of today. If the credit bureaus and or creditor is found to be that the information is no longer valid, well, now that information is deleted off your report, okay? So we're able to repair the past, right? That's what it's all about. It doesn't mean 100% of everything gets deleted. If you see any ads out there, credit repair companies guaranteeing 100% deletion or bragging about 100% deletion or showing I'll tell you this right now as a consumer, if you see someone out there showing TransUnion results and it's deleted, that's good for them, but that doesn't mean that happened with Experian and Equifax, okay? They're not telling you the whole story. They're marketing towards you and potentially in false advertising, okay? You need to understand that if information is valid, there is definitely a potential there that's going to stay on the report. It's valid. Now, but it's not uncommon, once again, that there can be easily inaccuracies on the report. Reporting history is inaccurate. Balance history is inaccurate. The balance due today is inaccurate. There is so much involved. Those are the things that you want to target, when it comes to the credit repair process. We want to alleviate, the negative weight, the weight that's holding us down right now in our ability to move forward. We have to alleviate that. We have to lessen that weight. Because when you have 100 pounds weighing you down right now, you get down to 90, 80, 70, 60, 50 pounds. That right there doesn't always equate to scores improving. What it does equate to is it's giving you the opportunity to be approved for additional lines of credit if needed, rebuilding, building, management. Those are the things that improve score, right? That improves the strength of credit profile. That improves scores. And when you have less negative history, the amount that you can improve is going to be more so or quicker because of that. That's why credit repair is so powerful, because if you can repair the past, based on information that's no longer valid or inaccurate, that's going to help you moving forward. Okay, so that's why it's so key, but you have to do it strategically and you have to be reasonable. You know what I mean? Once again, if there's a judgment that's due and you owe that money, you owe that money. Okay, we need to negotiate a settlement. We need to help you get to some sort of resolution with that. That's not going away realistically, most of the time. So you have to just understand how the game works, and you have to be educated to know how to make the proper steps moving forward to get you to your goal. Now, everything I'm talking about, I know it's a lot of information, but this is all the process in being able to move forward in your credit. It could happen quickly. It could take up to a year. Varies greatly because based on your situation, your financial situation currently, the status of our current credit report right now, what are we looking at doing? Do we need to budget ourselves for debt settlement? Do we need to do a lot of repair? I mean, there's so many different factors. How much building do we need? You know, all this takes time. So therefore, if you have a lot of work, you need to understand that the timeline could be 6 to 12 months. Now, to me, that's still fast. The amount of time most people go into to ruin their credit because they went through a hardship could have been a year, 2, 3 years, 4 years. I hear it all the time. So if you're able to get back on track within 6 to 12 months, to me, that's good. There are times, don't get me wrong, it can be much quicker, but once again, every situation is different. But all this, once again, is going to open up opportunity for you to move forward, pay less in interest, have the ability to be approved for certain types of loans that you're looking to get approved for. It's going to open up those doors for you, those opportunities, but ultimately, it is going to help you have a better financial stability. You have more financial stability because of that. I'd hate to see someone out there who has the ability to help themselves, but yet don't, and continue to pay high interest rates, high insurance rates because they're not willing to be proactive. And trust me, I get it. There's a lot of stigma out there surrounding credit repair. You know, the one-man bands out there that take your money and run. People, I hear it all the time. You know, there's a lot of places out there that advertise heavily that didn't really do what they say they were going to do. Trust me, I hear it daily, okay? I get it. That's why it's so important to take your time, do your due diligence, you know, and make sure you feel comfortable with who you're potentially going to be working with. If it's us, great. We'd love to help you. That's why we always take our time with our clients. Offer a free consultation that normally lasts about an hour, you know, to really go through the report with you and explain, you know, specific to your situation and your goals, what needs to be done correctly to get you to your goals. To me, that's key. If you call someone, they're immediately bringing up money and they want you to pay something, and you got to do this and do that, and they're trying to close you in that first phone call, I'm not here to say anything about those companies, but more than likely I'd say I would do my due diligence and reach out to other companies, because you need to make sure that whoever you're working with is going to help you. There are a lot of steps to the process, as I went over in this podcast and YouTube. There's far more than just the dispute process or credit repair process. That is a key component to open up the ability to the other steps needed to get you to your goals. But if someone only focuses on that and does not provide the education, the coaching, and motivation, all those things holding you accountable to your program, if you don't have that, there's a high probability you will fail. So I'd hate to see you invest in yourself and fail. If you're going to invest in yourself to get back on track, make sure you feel good with it, and make sure the person you're talking to or the company you're talking to has a track record of doing those things. So thank you so much for your time. I'm going to be doing a ton of YouTube videos, a ton of podcasts. I'm going to start doing a lot of webinars. I have one next week, Tuesday evening, 6 p.m. Central, where I'll be going through a slideshow explaining, you know, credit repair processes, you know, and just really getting into detail on improvement of credit. This Saturday, if you're local here in Minnesota, at the DoubleTree Hilton Hotel, I'm hosting an event called In Your Home, talking about everything that we did today, but in a lot more detail to help people. It's a free event. Feel free to register. It's In Your Home. It's on Eventbrite. You can go to my Facebook, facebook.com/CreditHavins, and you can register for free. Whatever it is, would love to help you. We'll be doing this all the time, everywhere. It's about helping, and it's all about education. So thank you so much for your time, and I look forward to talking to everyone more.